good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me, Saisha Faridi, and it's the last hour of trading session. If the cues are anything to go by, we are likely to end in the green because we have finally managed to break our head above the water, and the Nifty just around that flat line moved into the green, almost 100 points off the lowest point of the trading session. It's metals which have seen quite a bit of bounce back for the last couple of trading sessions. Today, they're also getting a bit of a fillip from the fact that China has decided to cut their prime rates. So that's fueling the rally there. And Nifty IT has also managed to hover in the green on a YTD basis. That's also turned favorable. So we're watching out for some of the IT counters like HCL Tech, etc. Bajaj Twins, they slip in trading session. Remember, yesterday there was quite a bit of momentum on the NBFC space. Today, both the Bajaj Twins are in the red. Having said that, insurance names are spiking. So whether it's HDFC Life or SBI Life, those are the counters which are trading in the green. Tata Motors has managed to hit a 7-year high on an intraday basis, so that stock is up around 2.5%. We're also watching out for what's happening with Z Entertainment. That had taken a knock of around 6 to 7% on an intraday basis. That has managed to hit the 2021 lows yet again. And then Indigo was trading close to the record high levels on the account of that 500 aircraft orders. So a lot of stocks which are buzzing in the trading session. But the big news is that the markets has made a stellar recovery, almost 100 points from the lowest point of the trading session, Aisha.
Oh, yes, it has, but still a while to go before we attempt that lifetime high for the index. Let's see. At least we're back on track. HDFC AMC and Timken, both those stocks in focus. Couple of block deals, remember. So Aberdeen offloaded its balance 10.25% stake in HDFC AMC. That's one stock in focus. The promoters, Timken Singapore, is likely seller in the Timken block deal as well, which transpired earlier today. Stock still under pressure, down about 7%. And then there's Tata Industries as well, which has launched a QIP. They're looking at a floor price of 984 thereabouts. They're looking at some sizable fundraising. The biggest story today has really been the comments coming in from Nitin Gadkari and the kind of impact that it's had in some of the stocks that I just talked about. Firstly, he signed a paper to mandate air conditioning in truck cabins for drivers. AC cabins for truck drivers, the minister said, is going to be mandatory from 2025 onwards. And look what it's done to names like Subros. That's been locked in upper circuit from the word go. Remember, the company makes ACs for truck cabins. They have the largest air conditioning and thermal products market share. Almost about 45% is the kind of market share that they cherish in the CV market. So that's one stock which is also in focus. And then IIFL Securities, in fact, not just IIFL Securities, all the group stocks, they are under pressure after SEBI's red flag on prohibiting them from onboarding new clients for about 2 years. That's really one stock which is under pressure as we speak as well. But let's focus on the market recovery while we will continue to highlight all the buzzing stocks in the next 1 hour of the show. Let me welcome on board Naresh Mirani as well as Kush Bora to talk about what they're making of the market right now. Naresh, hi, afternoon. Seems back on track, a good amount of recovery from the session lows. What's next on the cards?
So very interesting recovery on the indices, specifically Nifty, and we are seeing a good recovery in the heavy in a big way. So now we need to watch out for whether we can go towards that 18,900 mark. We are seeing some bit of a recovery in ICICI Bank, HDFC Bank, Reliance Industries. So the bias is positive. It actually, today's recovery makes it a trade wherein you keep a stop loss at today's low and go for a long position. So bias is positive on the Nifty, and overall the broader markets continue to be in the same momentum, slow and steady upticks. So for now, watching out for, say, if we can see a reversal in banking space, that could be the critical point whether HDFC, Kotak, ICICI can do well.
Okay, let's see what happens because the Nifty Bank, as you pointed out, has turned favorable. It's the heavyweights like Axis Bank as well as SBI, which are considerably off the lowest point of the trading session, and hence that move in the Nifty Bank as well. But Anshul, wanted your take, which is that sector which is, very high conviction buy at this point of time, barring financials. If you can, probably talk to us about the broader markets theme, which is that sector which comes in as a high conviction buy?
In our judgment, over the last 6-7 years, pharma has actually gone nowhere, and all the negatives that this sector has seen, both in terms of volume contraction as also prices coming down, particularly in the export market. Those have played out in stock prices. This looks like a bottom formation in this space, and maybe from here, risk reward is quite favorable. And in a period of say 2 to 3 years from here, unlikely that you will lose money, quite likely that you will make money.
Just looking at some of the other buzzers in trade and look at HDFC AMC as well as HDFC Life. Interesting to note the kind of recovery that you've actually made from HDFC AMC. In fact, it's recouped all of its budget time losses, and I think the stock is back at its 52-week high, if I'm not mistaken, currently holding up about almost 8.5% in the green as we speak right now. That's, of course, HDFC AMC. HDFC Life is the one which has recovered its budget time losses, 2.6% higher on the futures as we speak right now. Anshul, clearly renewed interest in the entire insurance space. Wanted to get your thoughts in here.
I mean, again, this is a space which has, for the last few years, consolidated quite significantly. Some of it is also because of the upheaval that we saw because of COVID, and then valuations kind of factoring in most of the upsides. After this consolidation, clearly this is a space where there is secular growth in the country. The penetration is quite low. And from here to the next few years, there is going to be significant volume growth, as is widely accepted by the street. Now that valuations have consolidated, and we are seeing regulatory uncertainty also in prices today, it looks like from here there may be individual opportunities in this pocket, and one should take advantage of that.
There are a lot of individual opportunities if you want to take advantage of that. But let's take stock of what's happening in terms of the other price volume buzzers as well. Piramal Enterprises is one stock I wanted to flag out. That's seen an up move of around 5 to 6%. It's seen a breakout from the upward sloping resistance pattern, surpass the 200-day moving average, and the volumes too are towards the heavier side, almost 4x of what we have seen over the last 20 days. Container Corp, on the other hand, is seeing a bit of a breakdown. It's formed a bearish engulfing candlestick pattern and has managed to snap the 4-session streak of forming higher lows. So Concor is in focus on account of that. And then Z Entertainment, which is managed to hit a fresh 52-week low on an intraday basis. In fact, it's back at the 2021 lows now, had seen a sudden knock of 5 to 6%, and the volume to 2x of the 10-day average. Kush, wanted your take regarding these some of the buzzers, whether Piramal Enterprises, Concor, Z. Would you be a buyer in any of these names at lower levels, or any chart that looks interesting to you?
So Piramal does, for sure. We know it's coming off a very long slump, but the kind of move that we've seen, let's say somewhere around end of March, the recovery is gradual. It's not one of those stocks that has a breakaway rally and just gives those wild swings. But slowly but surely, 650 is where it formed its base, and now it's almost about that 830, 850 odd levels. So I think this is this is a stock that someone could enter into. But from a positional perspective, there was a resistance at around 800, 820 odd levels. The stock has surpassed that today. It's also trading above its 200-day moving average after a very long time. Back of very good volumes. So I think this is one stock that that could go higher from here. For a fresh entry, I would actually look at 875 and 925 kind of levels on this in the coming months, and a stop loss here would be just under the 800 mark, which is about 790 odd. Z is one stock, given everything that's happening around it, I would very clearly avoid, even short I would avoid for now, because it's very close to its base of 175, 170 kind of levels. So that's a very clear avoid even from a technical standpoint. And as far as Concor goes, well, we've been seeing some kind of recovery in this, but it's failed, and it's meeting resistance around the 680 mark where the 200-day moving average lies. So from all the three stocks, the only one that really looks good on the charts is Piramal Enterprises.
Well, how can we not talk about Tata Motors, which is currently at a 7-year high? There's clearly some renewed activity on Tata Motors. And it's quite interesting, Anshul, given that last year was all about M&M and TVS's outperformance, and now newer names are joining the fray. Just wanted to understand what's your leaning within the auto pack.
Yeah, within the auto pack, we think that it's very clear that passenger vehicle space doesn't have the risk of EVs coming in and making the whole space obsolete immediately. Some of that risk exists in the two-wheeler space, which is why passenger vehicles are better placed. Within passenger vehicles, again, there is a very definite trend which has played out over the last few years, which is that consumers are moving towards SUVs. So companies which have SUVs and have a foot in the door there are benefiting. Some of the names that you mentioned benefited as a result last year. And some companies are getting their act together. And in the current year, they're getting new vehicles in that space. And it's likely that they'll gain a bit of market share as a result. So our preference is for passenger vehicles, and within that, companies which can cater to the SUV craze of the market in a sense. Also, the commercial vehicle space is quite attractive at this time. We see volume tailwinds as also margin triggers in this space. Raw material prices have come off. The shift is happening from LCVs to HCVs. HCVs, as we all know, are higher margin products. And so even there, there is attractive opportunities available.
Right. Okay, since we just highlighted that, some developments when it comes to Motown, Nitin Gadkari, the Minister for Road Transport and Highways, said at an event just last evening that he has actually signed papers to make ACs mandatory for truck cabins in India and that this is going to be implemented by 2025. Let's listen out as to what he exactly said.
वो जब मैं मंत्री बना तो मुझे लगा कि इतने 43, 44, 47 में डिग्री टेम्परेचर होता है तो ड्राइवर की हालत बहुत ख़राब होती है, तो मैं एयर कंडीशन केबिन के बारे में बहुत आग्रही था, पर इससे कॉस्ट बढ़ेगी ऐसा कहकर कुछ लोगों ने काफ़ी विरोध किया। पर भी आज मैं यहाँ आने के पहले मैंने वो फाइल पर साइन कर दी है कि इसके बाद ट्रक की जो ड्राइवर की केबिन होगी वो एसी होगी।
Okay, as a result of that, Subros as well as Amber Enterprises, those are the stocks in focus. Subros, of course, is locked in upper circuit. It has almost 45% market share. Amber Enterprises has a very small, insignificant portion right now coming in from this space. But nonetheless, that stock is soaring away in the trading session, 9% higher. The other stock that I want to discuss with you, Naresh, is HCL Tech. Very surprisingly, that stock is sitting at a 52-week high at this point of time because rest of the IT peers and especially the large cap names are nowhere near the life high levels. And then, of course, the one that we pointed out, Amber as well as Jamna Auto. From these three stocks, Amber, Jamna Auto as well as HCL Tech, which are the stocks that you would recommend?
So I would start with HCL Tech. That is the one which has given a breakout today. Now, if you look at what happened with the IT pack is the whole IT sector topped out somewhere in the end of 2021 to 2022 start. And post that, we saw a sharp fall. And from those levels, there was a recovery in September till November, December. And then we again saw a drift lower. By March, many of the large cap names came back to the same prices. In mid caps also, a lot of these names came back to same prices. The ones which did not became relative outperformers over the last few months. And in that case, if you look at HCL Tech, that is the one which made a similar formation. The stock went 900 and then recovered back to 1150. But in this dip, it did not go even towards 1000 levels. And now 1150, which was a price point for the last 4 months, which was a high, hit almost 6-7 times in this period, has been taken out today. A clean cup and handle breakout. So if this works out, it could go all the way to 1300, 1350 as well. So HCL Tech looks interesting. Jamna Auto is a case in point wherein there has been a huge block deal today. So could be a one-day price action, but 95 has been a very strong support for the stock for the last 1 year. And 110 is a resistance. If it sustains 110, that could be a breakout. So for now, it's more like a one-day deal effect.
That's about Jamna Auto. But Anshul, what's your take about the IT pack? Because it's been very, very divergent this year with respect to how large cap versus mid cap and small cap IT has really performed. What's your view as a house? Are you more positive towards mid cap IT or completely staying away?
Actually, this space one will have to look at on a stock by stock basis. I don't think there is a definite trend sector wide, the kinds that we saw in the year 2020 and 2021. The reason I say that is because even after the recent correction, this sector trades at premiums to their 10-year average valuations. So valuations haven't really adjusted, particularly of the large cap names, to levels of where they used to trade before COVID. As a result, this sector, although having said that, I must say that there are opportunities which are stock specific. So this sector does offer opportunities, but I don't see a trend which is sector wide. As you may have seen, some of the names that you're flashing on the screen, some of those names have done very well in recent times, while many of the large cap heavyweights have actually consolidated. That tells you that this is a stock pickers sector for the moment, and that's the trend we anticipate for the rest of the year as well.
That's the take coming in as far as the IT sector is concerned. But on that note, slipping to a very short break with the news that it's just around the flat line for the market, so it could go either way.
Back with closing trades right here in ET now. Attempting a recovery. Let's see how sustainable this looks. We've still got more than half an hour of trade left to go, so it can really swing either which way. But at least we've made it back to that 18,800 level on the futures and well above actually for now. Over that 18,750 print on the Nifty spot. It's HDFC AMC, HDFC Life, Tata Motors, Eicher Motors, Tech. These are the stocks which are really powering the index ahead. And besides that, just want to check in on what's keeping it at bay as well, because it's a bit of a tug of war right now. You're definitely seeing some profit taking on a Bajaj Finance, which has really been moving one way up of late. There's M&M, which is down. There's Maruti, there's SBI, ONGC and Reliance. So the erstwhile heavyweights, they are the ones which are still pretty much in slumber mode, as is the case with ITC. That's really not gone anywhere as we speak right now. But let's take a closer look at what else has been buzzing in terms of, stock-specific movers. We've, of course, been flagging off what's happening within the IT pack. We just told you as to how the defense pack as well is going to be in focus, especially on the sidelines of PM Modi's visit to the US today. So all, aspects of defense, the co-production, co-development, they are all, as we understand, going to be part of the discussions over there. What is your own sense on whether the defense pack is now priced to perfection, or do you think there's still headroom and one can still buy in?
Yeah, so defense, as far as the eye can see just now, it is priced for that. But clearly in defense, what's going to happen is much beyond what the eye can see just now, which is there is so much indigenization which is in the works. Clearly, nearly 60+% of our capital goods in defense are imported. And much of that is imported from Russia, where we exactly know what's happening. And this import is really at risk. As a result, there will have to be a push for indigenization. And beyond what we can see, many of these companies are going to get significant tailwinds on order booking. I mean, let's talk of a defense missiles company in India. That company has nearly 6 to 7 times order book to sales ratio. This number used to be about 2 to 3 times. That is the kind of tailwind that order booking has seen in this company over the last 1 year. And much of this can be explained by what has happened in recent times in Ukraine and the drive towards indigenization in India. This will be seen in many companies across the defense repertoire. And we do believe that this is a space which will see volume growth, and as a result, stocks will have also tailwinds in this space. For now, as regards stock prices and how they're valued, one would need to be a little cautious.
Well, talking about this US landmark trip, which is scheduled from June 21st to 23rd, PM Modi will also be meeting Tesla's Twitter boss, or rather Tesla and Twitter boss, Elon Musk. The meeting comes in the backdrop of Tesla actually scouting for a location for setting up India factory with its officials meeting Indian government officials in the last few months. In fact, the premium EV maker, as we understand, is also planning to source components from India. Modi is going to be meeting Musk this trip, and he met him in 2015 as well during a visit to Tesla Motors factory in California. In fact, my colleague Sumit Chaturvedi joins in to talk about the backdrop of this meeting and how critical it would be this time.
In his high-profile trip to US, PM Modi of India is going to meet Elon Musk, the co-founder of Tesla and Twitter's boss now. Well, the development come in the backdrop of Tesla scouting for land to set up a factory in the country. Tesla is also planning to set up a logistics hub here to source components. In this development, the whole meeting between PM Modi and Elon Musk, billionaire, it becomes quite important. Remember earlier, Tesla was also interested in coming to India, but the talks were stuck at import duty when Tesla wanted import duty reduction for its electric car. So in the whole scenario, this overall meeting becomes quite important. Remember in 2015 when PM Modi went to US and he went to California factory of Tesla, there also he met Elon Musk. So all these developments had taken place then, and today also when the meeting takes place with Elon Musk, it's going to be a different kind of atmosphere. And yes, Elon Musk has now taken over Twitter as well. That has now undergone many changes, including the paid system for users as well. Not just that, PM will also meet around 24 other dignitaries, including people from economic side, Nobel Prize winners, also scholars. And on 23rd of June, PM will meet around 22 CEOs that include CEO of Adobe, CEO of other big Indian origin CEOs that are based in America, Coca-Cola CEOs. All these meetings will take place. A crucial thing this time is defense technology, industry and trade, and also technology is on the agenda. But this clearly meeting between PM Modi and Elon Musk is going to be a crucial one and to be watched out for.
Okay, so let's see what comes out of that meeting, but definitely all attention is on that Modi-Musk meeting, which is likely to happen over the course of next 24 to 48 hours. But what's happening in the market at this point of time in terms of the gainers, it continues to be HDFC AMC, Jamna Auto, Amber, Apple, Shriram Finance, the second day on a trot, Piramal Enterprises, Mazgaon Dock. All of these stocks are seeing quite a bit of action. And on the losing side, Z Entertainment, Timken, IFL, Kalyan Jewelers, Concord. These are the names which are on the back foot today. Wanted your take, Kush, on Tata Motors as well. We have discussed that stock, which is sitting at 7-year high level. Do you expect that momentum to continue for Tata Motors, or is it time to shift gears and probably look at some other stock?
It really depends on your time horizon. You know, if you've been a trader, then I'd suggest put a trailing stop loss on this one for about 570 kind of zones, because typically what happens is that these 590 600 kind of levels, they act as a bit of a resistance, more psychological, but also you will see some call option build up around these levels. So if you're a trader and if you've held on to this for a while, then put a trailing stop loss, as I said, around 570. 590 to 600 are the zones where you should book some profit. But if you're in this for the long game, I think this has come after a very long time. This breakout has come after a very long time, and it looks like it's here to stay. The indicator setup from here also, despite the kind of run up that we've seen, suggests that the stock could move to 650, 675 kind of zones in the coming months. So if the horizon's long, I would suggest that the rally's just started. Best hold on to this one. For a trader, a good idea to book some profits around 590, 600 kind of levels.
Okay, so that's a take on Tata Motors. But since we were talking about Apple India, which is up around 5%, let's go across to my colleague Sharad as well to try and understand what exactly is the chatter in the dealing room about this and why is it seeing buying action today, Sharad?
Well, yes, in focus we're having Apple India, and what we're hearing from our sources is that a large insurance company is acquiring stake in the company. Key investors already included in the company include the names such as ICICI Pru Life, Malabar India Fund, Nippon Life Mutual Fund and Aberdeen. Now the stock itself is a part of the GNC portfolio as well for Ambit, and the company is expected to launch its turnaround plan for its developed markets. Now let's look at the key triggers going ahead for the stock, and this includes that the company recently acquired a mobile app marketing platform. For FY24, revenue is expected to be around 20%, while the margins, that is expected to be more than 20%. That's the estimations coming in from the management. Apart from that, the company will be targeting high value and high margin products going ahead. And the stock itself, what analysts are stating is they have turned valuations being actually at a much comfortable levels, and they are still corrected by almost 19% from 2022 highs. Now, the Indian ad industry would also be in focus. It's expected to rise 15% to $12.6 billion. While if you look at just the digital ad industry, that is expected to rise as high as $28 billion by 2028.
Right, okay. Anshul, before we let you go, let's get some ideas from you. Anything that's looking interesting in this market?
If you find something, let me know, Aisha. I mean, the market has been running away, and it's not easy to be chasing. In fact, I'm always reminded of what Charlie Munger says. He says, invert, always invert, which means that the market is, in the context of what's happening in the markets have run away so much. Do you think that from here, incremental returns are going to be as substantial as you've made in recent times, or is it time to be cautious? Having said that, I must say that it's not like this market doesn't have opportunities. In BFSI, particularly in home finance, I do find opportunity. I think that in capital goods, there are certain companies where earnings are depressed for the moment and margin uptick is ahead of us. And these companies trade at a significant, nearly 50% discount to some of the frontliners in capital goods. As those margins come in, we do anticipate that the valuations will expand. Sugar is a space where we think that the street hasn't really been up to date with what's really happening in this space. Prices we see in sugar, that is sugar prices, have significant tailwinds from here, particularly if rains are scanty in the current year, which seems to be the case. And so these are some pockets that we are finding interesting at this time and where we're putting our money to use.
Okay, thank you, Anshul, for joining us with that take. Those are the pockets where there's still some value, likes of sugar, etc., something that you need to watch out for. But before we step into a very short break, let's take up the view from Naresh as well. Naresh, just wanted your take regarding a couple of these banking names, Kotak Mahindra Bank, Axis Bank, Bank of Baroda. They are moving higher from the lowest point. Would you be a buyer and buy the momentum?
So Kotak Mahindra Bank has come back and tested the gap which was done. So that's a good zone of recovery. So the gap was around that 1750 to 1830 mark. So out here the risk reward is interesting for a bounce back. The bounce back should again face a resistance around 1900, 1950 level. So that's a small bounce back. Bank of Baroda looks the most interesting one in terms of pure technical momentum. So if you look at the stock prices, yesterday it gave a breakout. The highs for 2022 were around 197, which is not far. So that would make it a new 52-week high and also a 5-7-year high. So Bank of Baroda looks the most interesting one in terms of a technical structure.
Okay, so that's the take coming in on Bank of Baroda. The technical structure looks good, but slipping into a very short break, don't go anywhere. Welcome back. Well, it's looking better for the markets at this point of time because we're now back at around that 18,800 level, just 2 points shy of that. So quite a bit of stellar recovery is what we have seen. At the lowest point of the trading session, we were at 18,650 thereabouts. So almost 150 points is what we have managed to catch up in the last few hours itself. And now we are at 18,800. And even Bank Nifty, my guess is, has actually moved into the green. That too was seeing quite a bit of, it was languishing in the red, but now it's moved high by around 78 to 80 points. Broader markets had been doing well, and that continues to be the case today as well. Gurmeet, hi, thank you so much for speaking with us. Just wanted to begin by asking you your market, setup at this point of time. Do you believe those high levels are likely to come, those record high levels soon, and post that the rally will continue, or we'll hit the pause button there?
Thanks, Anisha. I think markets eventually will make a high. I think the million-dollar question is when. I think, but clearly the positioning has changed. Even if you look at, while the FIs are still net short, but if you see, for example, in May, they pumped in almost 44,000 crores. The June inflows have been pretty favorable so far. The retail book anyways continues to do well with SIP book now almost 14,000 crores plus consistently. So I think the positioning has changed, and I think now it's more like what probably was seeing for last 18 months was sell on high. I think the positioning is clearly now on buy on dips, and after a long time, if you see the price action, in, especially in mid and small caps, it's suggesting that the sentiment has really changed. So it's important that we don't get carried away, because that's when you make mistakes. Just be focused on buying at the right valuations. I think it's extremely important, because interest rates will remain high for some more time before you see the cycle reversing. So it's important to give a fair value. And I think the pocket of the market which was very not doing well, underperforming, just for example, the insurance stocks. We saw maybe some bottoms up even in pharma happening after pharma having a very bad quarter. So I think there's a bit of rotation now happening towards things which are probably more reasonable.
Right. Okay, just looking at some of the other buzzers. Right now, Tata Motors, of course, that's scaled up a good 3% as we speak right now. That's sitting at a 3-year high, clearly. Gurmeet, conviction that Tata Motors is going to now scale up even further from here, and the story may have just begun?
A couple of things. Tata Motors has a lot of moving parts. I think the guidance of being net cash flow positive in FY24, I think really helped. They are deleveraged to a large extent. And I'm very positively surprised by the JLR wholesales. So if you see the bookings and the order book for Defender and the Range Rover, I think it continues to look good. Indian passenger cars continues to do well. I think even the CV is now coming back. We even saw, I was interacting with the Eicher team some time back, and I think they are also guiding now for a double-digit growth. So I think it's all about all things coming together. Plus China, I think, is a big factor. We've seen some rate cuts and some monetary easing there as well. But I think, again, as I said, it's run up quite quickly. So maybe could be for some consolidation. But overall, I think the outlook remains constructive for auto. Also, I think now the rural-facing stocks, which is the two-wheelers, the tractor makers, and the entire auto ancillary value chain, will also start looking up as we see increase in MSPs, more cash. In terms of various states now, we have 4 state elections also this year. You'll see more on fertilizers also. So I think even the rural facing side of auto will start looking better now in the second half.
That's the take coming in. As far as Tata Motors is concerned, yes, lots of moving parts for that one, but at least those parts are aligning themselves positively, or at least that is what the street is baking in at this point of time. What else is buzzing? Power Grid seems to have had a bit of a breakout in the last few minutes. So on price volume, that's showing a bit of interesting move. And then Central Bank as well. If Kush is with us, Kush, do you want to talk about Power Grid, Central Bank, Century Textiles?
Let me start with Power Grid. Well, again, this stock has seen a bit of a recovery, went into a bit of a slump, then again back to those levels. So my suggestion is that this will perhaps continue the momentum, although this 250 level might act as a brief halt or more of a pit stop. But on the whole, the kind of setup that we've seen after a while, and the exciting thing is that there's a lot of momentum in this, which is usually missing in this space and in this stock in particular. So I think Power Grid could scale to higher levels. 275 and 290 is where the stock could head to in the coming days. And for a fresh entry, my stop loss here would be around 235 kind of levels. Century Textile was the other stock that rather Central Bank was, I think, the next stock that you mentioned. Again, not a very encouraging structure. I would say the last 2 days kind of move is showing a bit of a breakout, but I would still probably wait a little, because there's a gap at around 30 odd levels, and it's very close to those resistance levels. Once that is filled, the stock might perhaps take a pause. So for me, Central Bank is a clear avoid for the moment. Power Grid, as I said, yeah, that is something that looks very interesting on the charts and does warrant a fresh entry.
Okay, just looking at a couple of other buzzers, and of course, HDFC Life is on a tear. There's HCL Technologies, Eicher Motors, Techem, Axis Bank. They're all holding out in trade. But on the flip side, there's also underperformance from an SBI, from an ITC, Reliance Industries, although it's recovered a little bit, but still not quite out of the woods. So these are some of the stocks which are holding out quite okay. we were just talking about as to how insurance stocks have been buzzing, and just look at the kind of performance that they've seen from those March 29 lows when they fell pretty hard owing to the taxation changes. ICICI Pru lost about 43%, or rather the kind of recovery that it has had has been a good 43% from those March lows. HDFC Life has recovered about 36%, and SBI Life as well is up a good 21%. Also, to be fair, some of these managements have guided also very strongly. The continued momentum in individual APE growth is what they've indicated. They are also seeing an uptick in retail protection sales. And the valuations as well for most of these names are looking fairly comfortable. And most brokerages, going by their notes, on an average, they still see upside potential in SBI Life to the tune of about 18%, for ICICI Pru about 3% or so, and for an HDFC Life about 1.5% or so. These are, of course, the average brokerage opinion that we've called out for you. But Naresh, let's revisit whether any of these insurance plays, SBI Life, ICICI Pru, HDFC Life, you foresee further momentum for.
So out of these names, one stock which is not discussed is Max Financial Services, which still is struggling around the lower end and has not seen a recovery. So before February, the stock was at 850. Today, the stock is at 700 odd levels. So this could be the one which could actually surprise, because that's the one which has not shown momentum. Last 4 days, say 2 to 4 weeks, 715 is a resistance. So if that crosses, this could be the one where there is still a lot of risk reward and an upside possibility left. HDFC Life has been the most surprising one on the other side of momentum. The stock is sustained above the 620 mark, which actually indicates a trend change out here. So this could be the next one, but I would go with Max Financial Services. That could surprise on the upside.
Gurmeet, wanted to understand where you think the upside potential, if at all, is within the insurance pack. And are you looking at this space to invest?
So, we've been very long-term investors in both HDFC Life and Lombard actually since IPO. Lombard maybe pre-IPO. HDFC Life, what's probably happened is that after the unfavorable announcement in the budget, industry started and analysts started working with a degrowth of 10 to 15% in APE. And what has happened in April and May, actually, if you see the numbers which come, they've actually grown 8-9%, and then Vibha guided for a mid-teen growth in APE. In fact, if you see the VNB margins also, they've maintained the margins at 28 to 30%, which means that the product mix is changing as the regulation goes. And I think the regulation was above 5 lakh and above premium. So I think we probably the sense I'm getting is probably there was some bit of overreaction as far as that segment is concerned. Also, I think the Exide Insurance merger is now creeping in. The synergies, they are making a mark in tier 2, tier 3 towns. I think HDFC and the merger also would present more opportunities. So the guidance look good, but yeah, the valuations are slightly now back to above me. They've become reasonable. I think so. We continue to like that. We also like Lombard. I think as the motor insurance portfolio improves, the other portfolios are anyways doing well. I think the total ratio will continue to improve. LIC also, in my view, at 0.6, 0.7 embedded value. I think that's another one which hasn't done as well it should have for both business and non-business reasons. I think that's another one which I think we are tempted to look at. We haven't really started adding.
So that's about the insurance space, but do remember that's a long-term bet coming in, so don't expect a sharp reversal anytime soon. Having said that, Gurmeet, a sharp reversal is what we have seen in a lot of these new age tech companies. If you look at the last 3 months, we have seen quite a bit of rally in the names like Zomato, even Paytm for that matter. And since the analyst meet, there's this renewed interest in Nykaa as well. Your take on some of these names?
No, we're staying away as far as so it's not that we completely dislike the new age companies, but it's just that the environment is that right now they're not in the green. Moment they'll become in the green, the P's will look pretty different. At some point of time, probably with Zomato at maybe $50 or even the Paytm at all time low did have some kind of a value tactical play. But I would like to wait for a few quarters. I want to see if this trend actually translates to earnings becoming positive without adjusting any ESOPs, etc. Nykaa for 15-20 crore profit, I don't think so paying 40,000 crore market cap would makes sense. I think what we are more likely to now look at more some fintechs and companies which are having this phygital model and doing credit creation. So the likes of Equitas, the likes of Credit Access Grameen, maybe Poonawalla to a certain extent. I think because what we are seeing now is formal credit reaching to those sections where it wasn't available. They were dependent on informal lenders. And I personally think after a long time, I've not seen corporate balance sheet this leverage and in this good shape. So this thought of that, the credit cycle has also peaked out and everything will compress, I think is a little overdone. I still think the bank credit will continue to do well, led by pockets with access to formal credit.
Gurmeet, is there any fresh space or fresh ideas that you have looked at in the last 2 to 3 months? Any fresh buys from you?
So we are actually looking at some niche plays, in exports. So we like textiles. We added Gokula as exports. So we didn't realize it will go up so sharply in last month. The reason was that once we did our research, we figured out the spring orders had started coming in much earlier, and also the number of inquiries, despite the UK treaty not happening, have picked up. Also, the new plant in MP actually is added to more efficiency. So we added some niche players there. We are looking at QSR as a theme. I think that entire space is just 70,000 crore market cap. I made this mention earlier. I think the way our eating habits are changing, I think the entire pocket deserves far more market cap with a lot of good players around. And we are now looking at the rural-facing economy. So we added more FMCG, and FMCG index has been one of the best performing ones. We are now looking at some of the agrochemical names because there will be a lot of announcements now. There are a lot of interesting developments on the technology side. Something like a nano urea. If you see, it's virtually 1/3 the cost and is used also less in terms of quantity required because it's sprayed not on underground but it's sprayed on the leaves, right? So there are a lot of stuff happening there as well. And we continue to play the manufacturing thing. And defense is where we think the prices have probably run up a little bit. So we would like to now change our stance to neutral there.
Catch the name of the QSR stock that you like. Which is that name? And within the defense pack, any favorites?
So we have Westlife in our portfolio. The reason being that if you see in QSR, maintaining the quality is extremely important in taste, and 95% procurement for Westlife is domestic. Great ecosystem, both in terms of their chicken suppliers, their buns and other suppliers, and in terms of.
Gurmeet, since we're talking about expansion, how can we not talk about Interglobe Aviation after that 500 Airbus A320 family order that they've placed and a sizable capex, clearly indicating the kind of conviction that they have that airline traffic is going to continue to hold up and hold robust for next 5 to 10 years, perhaps.
I'll be honest, I've never made money on aviation stocks. So that's something, it's a very gruesome business. It's also called a graveyard sector. But things may be changing with just now technically 2 strong players, right? We had Air India ordering 470 aircrafts, now we have Indigo. So things might change. But I think I like to play that through, better place, which is travel through hotels, for example. I think look at the way Indian hotels has done well. I remember it being 2-digit in COVID and now, see that run up. Lemon Tree is something which we like. Again, they have a 600 room coming up now in Mumbai near the airport. And the model has changed. I think now that everybody wants to have an asset-light model, more management contracts, great focus on working capital and margins. And Lemon Tree is more mid-market, so the average tariffs, etc., are also quite nice. So we like that space, and to an extent, some of this QSR, some other names, which is out of home consumption, if I were to call it, versus aviation. But as I said, it's tempting. It's just that the past experience is that we are a little afraid to take positions there.
Afraid to take positions in Indigo as it is. It's sitting at record high levels, so leaves little room as far as that buying opportunity is concerned. But let's get some BTSC ideas from our chartists as well. Naresh, you go first. What's the buy today, sell tomorrow idea? Naresh, you'll have to unmute yourself.
That would be a buy on HCL Tech, a clean breakout done, cover handle formation here. Stop loss at 1140 and a target price of 1220. Second is a buy on Muthoot Finance, good momentum seen across the financial space. This is a stock which has a lot to catch up. A stop loss at 1175 and a target price of 1230.
What about you, Kush? What are the BTSC ideas you are spotting?
Two of them. One is from the futures and options space, which is Bata. This stock has a very smart recovery, and for the last two sessions, it's been above its 200-day moving average, which sort of just completes the signal. So here, from a trading perspective, 1660 and 1680 are the targets that one can enter into, and 1620 would be your stop loss. From the cash space, there's one pick which is Angel One. Again, this stock also has completed its recovery, shown very strong momentum in the last few days, so this momentum could continue. From a trading perspective, again, 1650 and 1690 are the targets. 1570 is where I would place my stop loss.
Okay, so those are the top BTSC ideas coming in from our chartists as well. For now, it's not turning out to be a bad day at all. We started off, yes, on a softer note, but look at that massive rally that we have seen in the last 20-30 minutes itself. We are well above 18,800 and almost a 200-point recovery coming in from the lowest point of the trading session. Sectorally speaking, it's IT which is actually a top gainer at the sector level, and that's because HCL Tech is doing the heavy lifting, followed by Tech Mahindra, Infosys, Wipro, TCS. All of these stocks have managed to move in the green. Autos, of course, the heavy lifting there is Tata Motors, but Balkrishna Industries is also high by 5%. Eicher Motors is up 2%, then there's followed by Bajaj Auto, Hero MotoCorp, etc. as well. The only sole loser today is media, of course, on account of Z Entertainment, and then Pharma 2 is on the back foot. Some of the names like Abbott India, Alkem are trading with a bit of a red tinge, but not a whole lot, because if you look at names like Lupin, Glenmark, Dr. Reddy's, they are comfortably in the green. Gurmeet, within the pharma space, where does the preference lie? Is it the hospital names? Is it the diagnostic name? Is it the ones which have a lot of export, US exposure, or is it the domestic ones?
So, you have to play the sector. It's not a homogeneous sector. So I think what happened in US generic was that everybody became very gung-ho after 2014-15, and it led to, more supply, a lot of pricing pressure. I think that seems to be now stabilizing. You've heard more exits from the US business than people entering it, right? So that's the reason the stronger will probably benefit, but that's probably more tactical, not very long term. I think the branded generics continues to do well. Look at the way Mankind Pharma has done, 99% domestic. That's more like an FMCG business. Always will command. It's like doctor prescription driven and strong brands driven, and that will always command a higher multiple. What space we like for long term is the CDMO space. I think that's one space which we call as pharma outsourcing. Valuations are very reasonable. Yes, there could be 1 or 2 quarter pain more, as the export data suggests, but that's a high margin business, and once you commercialize the molecule, it's a very lumpy business. See what's happened to Divi's and Loris during COVID when we got the Molnupiravir thing going, right? So it's a business that can immediately add 100-200 million to the top line on a quarterly basis. So you have to be in it for probably 5-10 years to play it. So that space we like for really long term. Syngene, Loris, Divi's, good names there. And another space which we are now tracking very closely is hospitals. To us, it's more like consumer discretionary spending. As affordability picks up, as medical insurance penetration goes up. So we are tracking hospital stocks. We also track some niche names there, which are into heart care, child pediatric care.
Gurmeet, great to have you on the show as always. We'll let you go on that note. Let's just